In this video, I'm going to explain you what's an order book in trading and how can you implement the order book in your actual trading strategy for Bitcoin and other cryptocurrencies. So in this video, I will cover all the concepts that you need to know to understand order books and order book trading. So basically, an order book, as you can see here, is an order book, a book of orders of all the passive orders that are in a given market for a given asset for a given exchange. So for example, here we have the Binance USDT, so Bitcoin with collateral USDT order book. So here we have all the orders, the bids and asks related to this market in this exchange. But if we change to, for example, Bitfinex, Bitcoin USD, even if we have the same asset, because we have changed the exchange, we have here different order books, because every exchange has its order books. But as I said before, the order books are just related to the passive orders in the market. What are the passive orders in the market? The limit orders. As you should already know, in trading we have two main types of orders. The market orders, that we execute the order in a given market price, so we don't care about the given price in the exact moment. And we have the limit orders that are passive orders. So we put a limit order and we wait till the order is triggered, even if it's a buy order or a sell order. So we will consider passive orders as limit orders. So you need to know that an order book only tracks the limit orders, so the passive orders on a given asset, on a given exchange. So as you can see here in otoki.com, we have the Binance USDT order book, the Bitfinex USD order book, the BitMEX or XBT USDT order book, the Bitstamp. You see different exchanges, the same asset, different collateral. Okay? For example, in Binance will have Bitcoin USDT as collateral, but also we will have Bitcoin BUSD or TUSD. So for every collateral, we understand collateral as USDT, USDC, USD, TUSD, BUSD, okay? All the stable coins or fiat currencies, we will have a different order book. Okay, so inside of the same exchange, we will have different order books if we have a different collateral. Okay, here in Otoki, we can monitor different order books from different exchanges from different collaterals. Okay, so we are tracking the limit orders that are in a given market. Also, another way of tracking an order book is, for example, here we are still in Binance USDT, but we have a heat map. A heat map is just a graphical representation of the order book. So here, if we are in a Bitcoin USDT as collateral on Binance, we will have the Binance, the order book. This is the order book of Binance, the same that we can see here, but represented in a different platform because we are now in Trading Light. But the graphical representation of the order book is the heat map. As you can see, here is the order book, and when I'm reaching up or going down in the bid order book or the ask order book, you see that the levels in the heat map changes. So we can assume that the heat map is representing graphically the orders, the limit orders that we can find in the order book. What's the main issue that we have with order books? The main issue that we have with this kind of order book trading is that a lot of people or big exchanges or big actors or big traders use a practice that is called spoofing. Spoofing is basically that I put a limit order, oftentimes a big limit order in the order book, to try to trick you or to fool you to think that there are liquidity waiting to get filled in the selling side or in the buy side, and then I remove the order. So I can put here, for example, here we have 13.7 Bitcoin, okay? And I can remove this and then the liquidity will disappear. And this is a very common practice. As you can see here, for example, we have 150 Bitcoin and then it was removed and put below, okay? Also here, this order here, we had 191 Bitcoin and then it was removed, this order. And it was not filled because the price was not reached this level and then the order got removed. So this is called spoofing and is a market manipulation technique that is very common in crypto markets and is not banned because crypto is not regulated. And then the main question, how can we use order books in our trading strategy? What's the use of order books in trading and our trading strategy? As I said before, an order book is just a graphical representation of the order book. A heat map is just a graphical representation of the order book, and the order book is just a representation of the limit orders that are in a given exchange for a given asset for a given collateral. So basically, we can use order books to identify supply and demand areas or support and resistance areas, because if we see that a lot of selling orders are clustered in a given price, for example, here we have 20 Bitcoin clustered at $61,150, okay? So we can assume that if the price arrives there, these orders will get filled, so there will be selling pressure there, okay? In the other side, for example, here at $61,340, we have 60 Bitcoin waiting here to be bought, okay? So if the price arrives here and the people is not spoofing, this order is not spoofing, we can assume that this buy order will be triggered, this limit buy order will be triggered, and then the price will find support here. So basically the order book, as I said before, here you can see here this red line is telling us that we have here 401 Bitcoin waiting. You can see here 401 Bitcoin waiting, okay? You can see here the order 396, and you see the red line that coincides. So now we can assume that there is a lot of liquidity, and this liquidity that we have here will act as resistance when the price reaches this level. If this order is not spoofing order, is not removed, then we can find resistance, because a lot of selling pressure will be clustered in this area. You see here the same level here in the order book that I'm pointing right now is pointing here in the market, because the order book, as I said before, is a graphical representation of a heat map, is a graphical representation of the order book, okay, just to make it more appealing. Also here, for example, we have the bids. You can see here in 190, you can see we have 190 Bitcoin waiting at $60,000, and if we go to the heat map, we can see here the same 190, 175 Bitcoin waiting here to get filled. So we can assume that if the price dumps here, we can find some support, because a lot of buy orders here, limit buy orders, will be waiting here. A lot of bids will be waiting here, so we can assume that the price will find support here. The same if the price pumps, we can assume that we will find resistance here. So as I said before, the main use of the order book in trading is to find supply and demand areas, support and resistance areas, based on the limit orders that are indeed in a given market, in a given exchange, for a given asset, for a given collateral, because for different collaterals will be different order books. If I'm trading in USDT as collateral, I will have in order book one order book. If I'm trading with USDC, I will have another order book. If I have a USDC or USD, I will have order book. And if I have, for example, TUSD or BUSD, I will have other order book. So this is very important to have clear these concepts about order book trading, okay? So if you like the video, please subscribe to my channel on YouTube, subscribe to my channel on Rumble, follow me on X, Twitter, or follow me on Instagram, and also share this video, like it, and we see you on the next video.